Welcome to the Stage Analysis Members Weekend video. It's the 22nd of May and we're going to run through our regular content tonight with starting with a few of the two of the major stocks with a look at what's going on with Apple and Tesla before getting into the major indexes, the industry group relative strength, then the major market breadth charts that we like to cover, and finally have a look through some of the US watchlist stocks at the moment, what's been coming up in those in the last few days or so. Right, so beginning tonight, we're going to look at Apple here. I posted about this on the public Twitter feed yesterday or the day before, basically when the it's coming down to this major level of support at the moment. It's been in stage 4 for a couple of weeks now. So stage 4 breakdown is when we start to break from a major stage 4 top. So most people obviously know the stages in terms of you just got a stage 2 advance, stage 3 top, and you start to come down into a stage 4 decline. So we're this kind of area here on Apple at the moment, but doesn't necessarily have to do that. Doesn't have to go all the way. A lot of stage 4 declines can start and end within a few weeks, but obviously the kind of market that we're in at the moment, we've got a lot of stage 4 declines that have actually reversed the entire stage 2 advance of a stock. Would be quite unexpected in a stock like Apple, as it's a major stock. It's got years and years of runs in stage 2 to get back through, but there is a rather large area of support that it's pushing into at the moment after breaking down into stage 4. So this is what we call a level of interest. It's kind of I think it's called an axis line as such, as we've got a previous high it's been support or resistance multiple times. So it's resistance at least 4 times within late 2020 and early 2021 before turning into support. So it's now second time as a major support level again here. You can see it's attempting to hold, drop down to the daily chart on Friday. It pushed underneath it, a little bit of a shakeout move and came back above. It was options expiration on Friday as well. So just monthly, I think. So that's obviously going to play a part as well. So we've got a little bit of a potential undercut and rally type move potential here. It could start to run back up towards the short-term moving averages. You've got 9 to 10% back up to the 21-day moving average there, and it's still quite a way below its 200-day moving average at the moment. So we did have a bounce back up to that. It would need to move around 15%. So it doesn't mean that the stage 4 is over. You can have lots of moves, sharp recovery rallies within stage 4, as well as obviously sharp moves lower. So we've had an initial move lower. It's whether this can summon some strength now to bounce. If it can't, and it has a small whimper here, or just continues straight down lower, then that would obviously be a major sign of weakness, and we could obviously start trundling off into a much deeper stage 4 decline of where we don't have any kind of support levels for a while down yet. So we're dropping down for another 10 to 20% or so into previous support levels there on Apple. Tesla making a similar move at the moment, also with a stage 4 breakdown attempt on Friday. So as I said, Apple broke down a couple of weeks ago. Tesla is the last of the mega caps attempting to break down at the moment. So all of the other majors like Google, Microsoft, Amazon, those kind of stocks have broken down a while ago now. It's about 4 or 5 weeks ago for the likes of Google and Nvidia, etc. So this Tesla's been the last of the mega caps that's been holding up. So it did make a breakdown attempt on Friday and actually did close the week slightly lower, but it wasn't a convincing breakdown by any means. When we get a stage 4 breakdown attempt, ideally you want to see a big bar with a strong close below the breakdown level. So if we drop down to the daily time frame on this again, you can see it was only a small move below the actual low there. It's about 5% below. It doesn't sound small in that regard, but relative to its daily price action and the rest of the weekly chart, it's not a huge close below the breakdown level by any means. So I wouldn't exactly say it's committed below it yet. So it's a tentative stage 4 breakdown at best at the moment. You can see relative strength versus the S&P 500 down here is broken below the 0 line. We go back to the weekly chart. can see it's a little bit more convincing on the weekly chart there. If we look back through previous, we did have a few little breaks below back in 2021, but this is the most convincing below the zero line that we've had in Tesla since the original stage 2 breakout back in 2019, which was back here on this week, which was the 21st of October week. So obviously had a huge stage 2 advance. So there's potentially a lot it could give back, and it has given back major declines in the past. Even this little move here, it looks small on this chart, was a big pullback. It was over 60%. So can over time, moves like that, they can look small, but they're actually huge declines. So this could have quite a big decline if it did start to roll over more convincingly here. We're already 46-47% off of the high already, so it's already had a big decline within its stage 3 topping pattern here. But if it can hold and we get a little bit of spring type action in here, you start to see this kind of move, then you'd want to see it get back above that 30-week moving average, start to hold above there, and then start to move back off to the high. So for a potential spring type action, that would be obviously best case scenario. Worst case scenario here is that we just get a little whimper and it starts to continue to move lower, and then you move off into a deeper stage 4 decline here. So although it could, I wouldn't say that's worst case. The worst case scenario is it just drops immediately, so we don't even get any kind of bounce here at all. So, but obviously open to anything at this point. They're both trying to, Apple and Tesla, both attempting to hold on Friday with a little bit of a shakeout move in the market in general. So if we look at the actual broader market itself, you can see there was this is the S&P 500 chart. You can see there was actually a shakeout type move on Friday. Again, as I said at the start of the video, it was options expiration at the end of the week. So we had a little shakeout move regarding a lot of those stocks related to their options expirations and the maximum pain setting, which I highlighted on the blog post. So something you can look into more, where they obviously try to create the maximum pain for people based on the puts and calls. So as I said in the post, there's some people that obviously are experts in that field, so look them up and obviously find out how that works. It's quite an interesting concept, really. So we look at the S&P 500 here in a bit more detail. You can see the squat type action here that we had on Friday. We're only early in a potential base structure here. We're in a stage 4 decline on the weekly chart. So if we go back to the weekly chart here, you can see we're still in a major stage 4 decline on the weekly chart here. The 30-week moving average is rolling over now. The 10-week is declining below it. So we've got a long way back up to the 30-week moving average here in the S&P 500 now, about 14%. So it's a very negative chart at the moment in terms of the stage 4 decline, and a long way below the 200-day moving average as well, which is all the way up here. So again, 14% back up to the 200-day moving average as well, and a lot of overhead resistance to work through if we do get a bounce. In the short term, this could be potentially the start of a new smaller base structure, which could obviously develop into a bigger base structure. We've got potential selling climax and automatic rally in the secondary test here, with a little bit of a sign of weakness there with the shakeout move. So whether this actually develops a base or not, obviously it's very early to tell at the moment. This is potentially phase A of a base structure, but as we know, it could easily just continue down. We're in a downtrend. We're below the minus 2 ATR level here at the moment, so we're in a strong downtrend at the moment on the daily chart. You can see only 20% of stocks are above their 20-day moving average at the moment in the S&P 500 here. So it's very weak. If we look at it from a shorter term time frame, so this is the 2-hour chart on the intraday. So you can see we're in a stage 4 decline since back in early April here. We potentially could be with this start of this base structure here. So this potentially on this time frame is starting to move into stage 1. It's not guaranteed yet. It could easily roll over again, as we saw with the previous attempt to base here. So we had an initial attempt at the start of May with a local selling climax and an automatic rally, but it couldn't hold the secondary test and made a continuation breakdown. So that could easily happen again. We're still in a downtrend, but we're attempting to make a lateralization, basically. So we've got a little bit of a reversal move on Friday, but that needs to then follow through back up towards the top of the range again to then start to develop more into a stage 1 base. If it can't and we get a continuation breakdown, then we just continue on in stage 4. Qqq Nasdaq 100, very much the same, a little bit weaker than we see in the SP 500 there with that regard. So still in a stage 4 decline, again attempting to make the first starting points of a base structure here. So got a little bit of a base structure forming, but it's got a lot of work to do and could easily just roll over back down to the downside again. So by no means a definitive move into stage 1 yet. It's still late in stage 4 on this time frame. Move on to the Nasdaq Composite on the daily chart here. Again, you can see the spring type action that we had on Friday with this long tail here on the candle, which undercut the previous low. So again, a little bit of a base structure starting to form. We're still well below previous lows from the major levels that we were in when the major base structure we had formed between January and April. So a long way to go. As I said, we need to have a move all the way back up towards the 200-day moving average there, start to get even mildly positive again and to get through all of that resistance. So it's a good 25-26% back up to the 200-day moving average and a lot of overhead resistance to work through in the meantime. Again, weekly chart still in a deep stage 4 decline. So we're a long way from any kind of investor method entry points in the stage analysis method. We're basically in stage 4 and looking for continuation breakdowns in stage 4 at the moment on any kind of rebounds back towards resistance. So for example, if we had a move back up, towards prior resistance levels in here, so you got some prior, if we had a bounce back up into these areas, then we'd be looking to reshort on the way down in here, or if it got further back up, same kind of thing, reshort back in these kind of areas at the moment until you start to form a base structure and start to develop out. At the moment, stage 4 decline for the investor method part of the trade of the stage analysis method at least is basically an avoid on the long side until we start to move back to better times again, of which we look to the market breadth and the various leading charts to see what's going on with those. So at the moment, still a long way off stage 4 decline. So Russell 2000, similar kind of behaviour, a little bit of didn't undercut on Friday low, so showing some relative strength in the near term. Did highlight this on the Twitter feed on Friday with a little bit of the small caps and the growth stocks showing a little bit of near term relative strength in terms of their pullback bar here. This candle where it sold off on Wednesday wasn't as strong in the small caps as it was in the S&P 500 and Nasdaq. For example, the S&P 500 and Nasdaq both made it all the way down to the bottom and undercut on Friday down at these levels. So relatively slightly stronger in the near term, but we're still in a stage 4 decline, and it has been in stage 4 longer. As I've shown before, this has been this moved out of this major base structure and into stage 4 back in early January time. So we're well into a stage 4 decline at the moment after the initial redistribution base there. Right. That's the growth stocks, so not much difference in that. You can see this is still making lower lows here. Again, a little bit of relative strength in the near term, not making a lower low at the end of the week like the major indexes did. So a little bit of near term strength in the growth. Qqq, which is the Nasdaq second 100 stocks. Again, a little bit of near-term strength. It was actually closed up on Friday, plus 0.2%. So it had a little dip down. So holding up relatively stronger than the large caps in the very short term. But overall, it's in a major stage 4 decline and has been for a long time now. So you can see the major stage 4 breakdown level was back here at the start of the year in this one. So if we highlight that on the chart for you. So this is where it started to break down into stage 4 and obviously then moved off lower, continuing to make lower highs all the way down. We haven't seen any major higher highs. So this is actually undercut. It's where it IPO'd back in October 2020. So a big reversal move on this one, similar to the kind of price action you've seen in the likes of ARK and the IPO ETF. So a lot of weakness in the mid and small cap areas of the growth stocks. All right. Next up, this is the VIX. So, as I've said before, we want to see it get back below this 200-day moving average in here in order to get back to a more positive environment. While it's above the 200-day moving average, then it's a much more difficult environment on the long side and favours the short side of the market.